Hey, what's up, everybody out there? Happy Tuesday for everybody out there. My name is Ruben Rodrigues from Tenacious Tribe, and here I am once again, as per my mandate to look into the training assets of the day of the week, and and to perform a diligent price action technical analysis about it. Before moving on to our training asset of the day, but yeah, I was watching S&P 500 today, or I did 30 minutes ago, something like this. And yeah, the usual chart. Right, my lenses are the monthly time frame. I prefer this time frame because it regulates my emotions. It does an awesome job at regulating my emotions and also allowing me to surf these long term gargantuan trends. And by pulling the monthly time frame chart on the S&P 500, we can quickly see that what's happening right now is that although there was a massive bull run last month, right now what's happening is that the price is colliding against the 10 EMA on the monthly time frame, which roughly equals to the 200 EMA on the day time frame, and it's being rejected straight away. Has been hitting against this EMA like a brick wall, and you guys should be very careful. There's a lot of volatility in the markets. One cannot tell whether this is a bullish or a bearish market. We can definitely see that there's a downtrend. So I'd say bearish in that sense, but we saw a very nice reaction from the bulls last month. Having this said, just be extra diligent about your risk management. Manage risk at all costs. Be extra diligent. Wait for double confirmation from the markets. Wait for a confirmed uptrend. Wait for, let's say, for instance, wait for a break and close of this trend line, a break and close, an assertive close, like with a strong candle of the 200 EMA, for instance. And otherwise, just stay in cash. When in doubt, just stay in cash and wait for better days. It also works. Stay alive. Um, allow the market conditions to improve. Allow for your edge to manifest and for you to follow it. And yet again, moving on to the training asset of the day. What I got for you guys today is NVIDIA, our old friend. NVIDIA. I saw that NVIDIA has been sparking some curiosity amongst the traders and investors, and so of course I had to pick up. This is NVIDIA, right? NVDA. So of course I have to pick up my favorite telescope, the charts and the price section and technical analysis of charts, and look into this stock and try to understand what this chart is telling me. You know already that as falls from my methodology, price action, technical analysis. I do not care about the fundamentals. I do not care about the macroeconomical perspective. I do not care about what CNN, CNBC says about this stock whatsoever. Buffett, I respect him. He's the best investor ever. Perhaps the content I'm creating here is more for speculators, which is not recognized by Warren Buffett, except from, let's say, Jim Simmons, for instance. But it does exist. There's a lot of people making money out of it. I am making money out of it. Um, so once again, here I am to give you my perspective, my price action technical analysis perspective, and getting started with it. As per our methodology, the first place I start with is establishing the market structure. Why is that important? Because what works in an uptrend or in a downtrend is not saying that what works in a ranging market. Sound technical analysis says that we ought to trade in the same side of the trend when the market is trending, and we ought to buy at support or sell at resistance when the market is ranging. So of course, therefore, step one is for us to establish whether we have a trending market or a ranging market. How can we establish that? Pure price action analysis, for instance. Lower high, this one here. Lower low, this one here. Lower high, lower low. Now the market is slightly ranging, but I mean, it did not break above this previous lower high, so we are officially in a downtrend. This is also ostensible by the downward sloping trend line provided by this trend line. If you guys have doubts about it, I mean, as of the moment that you have price trading below the 10 EMA on the monthly time frame, or the 200 EMA on the daily, or 50 EMA on the weekly, then you know officially that the market is in a downtrend. But I mean, yeah, of course, it's even more clear if you see that the EMA is sloping downwards, pointing downwards. It's even more ostensible if you pull in the weekly time frame, for instance, and you see that the 10 EMA is trading below the 50 EMA. Okay, so what have you established? We've established that we have a downtrend. What's our bias? Our bias should be to look for short opportunities, because that's how we stack the odds on our side. That's how we best stack the odds in our favor. Odds of success, odds of profitability. So our first, without further analysis, our first bias is to look at short opportunities and trade along with what the trend is suggesting us. However, also note, please, that of course trends do not last forever, and I hope Wall Street bets had not made you think otherwise. But no, trends do not trend forever. Eventually, markets reverse. So before being way too biased on what to look for here, we should look for extra signs of weakness, of strength, and trying to understand what the market is doing right now, and if the better odds are of a continuation pattern, for instance, because you said the market is ranging a little bit right now on the shorter time frames. Yeah, look at it. You're not seeing here neither lower highs, neither nor lower lows. This market is ranging on the lower time frames. So we ought also to get some clues of strength and weakness from this market, and try to ascertain whether the probability, or whether the odds are that we're gonna have a breakout on the upside and trend reversal, or breakdown on the downside and a short term continuation trend, so to say. Having this said, okay, let's start with the overhead obstacles before moving on to the remaining signs of weakness. I like this very much. These weeks below below or above the candle body. These weeks are very good at allowing us to establish congestion zones, support and resistance, establishing traces of bullish presence, bearish presence. This one is also very ostensible here. Very narrow candles here, breakout below, price hitting here against 50 MA, and also respecting this zone here. This is already like underneath obstacle. These are the most ostensible. These are the most ostensible overhead obstacles. Yeah. This is a ballpark, by the way. The precision is something that does not exist in trading. This is a ballpark area. It's just not a. It's not a. It doesn't have to be precise. It's not a line where price touches it and gets back. This is an area. This is a range. This is a place where bears have been in the past. A place where we know that the Bears, there are good odds that the Bears will be once again in the future. You know that whoever thought the stock was expensive here, the odds are whenever it comes back to this level, they're going to think the stock is expensive as well. So they're going to sell it, creating resistance. Or whoever bought, let's say, for instance, this breakout here in this small week, and is still holding a losing position at this stage, which will be very painful for sure. They'd be seeing a red ugly PNL right now, and the odds are that these guys are craving for the price to get back to this level and sell, and creating more resistance and more bearish pressure. On the underneath side, this level was already ostensible. You got the 50 MA here also providing support. What else you got? This level here is also screaming at us. And okay, these are the levels where you expect, in this case, bulls to step in this case, bears to step in. Let's see, for instance, if a volume price analysis confirms our price action analysis. It does confirm. Look at this bar. Look at these bars here. The bulk of the congestion, the bulk of the value areas, the bulk of the trading areas lies in the 120, 140 range for the bulls, and the 30 and excuse me, the 56 to 80 ballpark level, even below, as a proximal or upcoming support area. You know that in these areas the bulls are bought. The odds are when the price gets back to be here, gets back to this level, they're gonna be buying once again, because they're still gonna think that, unless, of course, unless they have fundamentally changed their approach or their view of what reality is offering right now, they're still gonna think that this market is cheap, therefore they're gonna buy it and they're gonna give support to the market. As to signs of weakness, yeah, once again, having established overhead support underneath and overhead resistance underneath support, it's now time for us to step into the signs of strength and signs of weakness from this market. On the signs of strength from this market, yeah, as I just pulled the volume price analysis. And I mean, this bar and its size, the sheer amount of volume that has been created here in this congested area and here below also, and also the rally that sprouted out of this level back in mid 2021. It's really telling me that the bulls are really supporting this market as of this level. And well, there were a lot of contract exchanges here, and the result ended up being a rally. This is ends down demand area. I'm expecting that if the price gets back to this level as it did here, I'm expecting a bullish reaction here. Um, what else do we got? I mean, bullish wise, I mean, okay, let me pull. No, I'm not seeing so many clues. I'm seeing something else here. I'm seeing something else here. No, not here, but here. Here. This is what I saw. I saw a bullish divergence on the weekly time frame. This is a very powerful trend reversal pattern. It's happening here at the end of this trend, and and this is a good sign that there are good odds that this market might reverse, or at least that the downtrend might come to an end. But yeah, I mean, these are in short the signs of strength. I mean, the sheer volume you guys got here. I mean, I think this is the most sensible sign of strength. This and this. I would not like to be a bear here, because I know I'm going to be colliding against a brick wall of buyers at this level. I'm not saying this is going to hold. Anything can happen. All those contracts that gave support to this market back in from August 2020 until May 2021. All these bulls might not be here anymore. We don't know. The odds are they are. The odds are those ones who bought here. There's still a lot of people who wider bought, and they're still giving support to this stock, thinking that it's worth buying at this level, or perhaps they missed entering into this stock long at this price level, and perhaps they are feeling they might have missed something. So whenever the price gets back to this level, they might feel compelled to buy and not to miss the rally at this time, at this stage with NVIDIA. Okay, on the weakness side, what do you have here? Let's look at it. What I like the least here on the weakness side is first of all this bearish candle. This bearish candle is humongous, gigantic, enormous. It tells us that there's a very big footprint of the bears in this market. I would be expecting the price to retrace to this level and then only then to resume the downtrend. It did not. It was a very ostensible move from the bears, and it really tells me that their presence is strong in this market. What else? We have established already that this is a strong support area, a strong congested area where I expect the bulls to be. I would be expecting for the volume presented at this level to be a little bit more above average than it was. I would be expecting perhaps an engulfing candle here. I would not be expecting for for this bullish candle to be almost engulfed here by this bearish candle that is sprouting this month. I would be expecting something much more dominant, and not such a sharp reaction from the bulls whenever the price touched this level, because as we established here before, this is a territory. This is where they should show up, and this is precisely where I like to see them. Those are the two main signs of weakness. Having this said, none of them is ostensible. I wouldn't like to be a bear here unless I saw like a cut below this level. I wouldn't like to be bullish in this market right now, also because I'm also seeing prominent signs of weakness. But having this said, of course, we need some more clues from this market, and a potential trade I'll take here would be something like this. If I saw price closing above this trend line, this could prompt me to do something like this. Wait, let me expand the screen. Expand the screen. Price to do something like this. Then okay, if it cuts above the breaks above the trend line. Okay, then I'll be more safe into trying to do something like this. Stop loss always below this support level, because if the price breaks below, then you know that your idea or the bulls are no longer supporting this market, and you know that the odds are that the downtrend is going to resume until this level. If the price cuts above, then you know that that downtrend is no longer in place. The odds are we start entering into a ranging market, and if you're in a ranging market and you're trading on the long side, if the price is here at this value zone, at this breakout zone, or even here, then you know you're safe and you have like a sort of a meaty trade, a good risk reward possibility. If you set your stop loss here below with some buffer and take your profits, for instance, partially 1/3 here, 1/3, and this should be a scenario that would incite me to enter this trade alongside, seeing a breakout on the of this trend line. What else? What else do I got for you guys? I mean, this is of course what I identify right now as the path of least resistance. One of the scenarios. We are at an inflection point right now, and of course, something else can happen. The price can get back to this trend line and bounce down and break below the support level. As of the moment it breaks below the support level, we know that the odds are it's gonna either retest, but eventually gonna stop here at this upcoming support area, which is telling me rule of thumb, or by it's a poor measure, but she's telling me that I'm not gonna have a good risk reward ratio opportunity here. So this is something I'll not trade. Okay, and that's pretty much it. Something extra that I saw here for future reference on the Learning Corner. I like very much what I've seen here for trend followers. You know, NVIDIA has a very big market cap. This is something that big money institutions like to see. This is the type of stock where big money institutions would like to trade, to manipulate, to conduct a manipulation campaign and follow the trend. And I like very much this technical technical analysis and price action example, because this really gives us a neat example of what a trailing perfect job that the 10 EMA does. Look at how it touches here and bounces upwards once again. Touches here, and once it crosses below, you know that the trend is officially over. So you know, as of this breakout, you could have entered here and exit. I don't have the next candle here, but it would be something like this. Yeah, the price would enter here. This would lock you a profit of 109.32%. Throughout 23 months. No worries. You don't have to be overactive. Just follow this trend, and that's it. This is a very good example. Also, a good example of base counting. Base 1, base time is running up. Base 2, base 3, base 4. These bases are very weak, and the price did not hold. These are very good examples of the tools you can use for trend following and exit triggers, as well as entry triggers, and also base counting and not trading base 3 and base 4. that's all I got for you guys today. Hope you guys enjoyed it. Happy trading and profitable trading, hopefully. Cheers, guys.